electric vehicles, warranty costs run about 300% higher than an internal combustion engine. Yeah, that's the one that nobody saw coming. And what that means is that as the new vehicle sale mix percentage increases of EVs, that's going to drive that up even higher.
Today, I'm thrilled to sit down for another conversation with Jim Roche, CEO of WarrCloud, a cutting-edge software platform reshaping warranty service work for dealerships. We dive into the shifting landscape of dealership warranty work, uncovering the massive opportunities with EVs, and the game-changing automation strategies turning warranty service into a major profit center for dealers. A big thank you to our sponsors for making today's episode possible: Icon Technologies, the Car Dealership Guy Job Board, and WarrCloud. And now, let's get into the show. Jim Roche back on the CDG podcast. Jim, welcome.
Oh, it's great to be back and good to see you again. Thank you.
Great to have you back on. You've been busy, huh?
Been a little bit busy. Every time someone asks me, I always tell them, well, it's an interesting time to be in automotive. But as I think back over the last 30 years, I can't remember a time when it wasn't an interesting time to be in automotive.
Yeah, right. There's always something changing. And for those that don't know, I specifically stated you've been busy because you just announced a big fundraise, which is pretty exciting. So we'll talk about that. Of course, we'll talk about your company, WarrCloud, what you do. We'll talk about the industry, some of the things that are changing in the industry right now, some of the trends. If I explore my curiosity, we can go in 50 different directions. But I want to just get started high level. For those that have not listened to an episode with you prior, can you give us a brief overview of your time in automotive and what you currently do today?
Sure. Thank you. So I've been working with dealers for over 30 years, almost exclusively fixed operations. As a serial entrepreneur, my process is to go out, talk to dealers, meet dealers, service leaders, be in the marketplace, and people will tell you their problems. And when you see a pattern, then I go and check to see if anybody has solved or is in the process of solving that problem. And if not, then we'll see if we can pull together a technology solution that makes dealer and service leaders' lives easier. In the past, I was one of the guys that did something called X-Time. Before that, founded a company called AutoPoint. And right now, I'm founder and CEO of WarrCloud, which automates OEM warranty claims processing for dealers and service leaders.
So let's just start there on overview of the industry, right? We know new car sales are still declining. Lots of it is driven by increasing supply. We're actually down in September. Numbers came in about 12% year over year, right? So that's broad brush. Of course, some brands are performing better than others. Margins, though, that's where it's really at, because if you just look at the publics, margins are like 15 to 20% down. It really depends. Again, I'm talking about new vehicle. In certain cases, it's combined. But it's really, margins have really gotten hit hard here. And so I think just starting high level, right? What are you hearing on the street? I know you speak with lots of dealers, and of course your company serves dealers. What are you hearing on the street in terms of trends, right? How people are dealing with this? What's your take?
Yeah, thank you. So I was at an industry event last week that Presidio Group put on, and they publish a quarterly outlook that's derived from NCM data. And what they showed, and this is hot off the presses, was that new vehicle gross is down 30.4%, used gross is down 19.3%, F&I down a little bit, but holding its own, and probably not surprisingly, profits down 20.4%. So, it is, when you and I last spoke, this was kind of lots of people predicting this as inventory normalized to pre-COVID levels. You're going to see margin compression is going to reassert itself. And it is. Plus, you've got, inflationary costs are up. Consumer sentiment is down significantly. So all of those things, in the industry, in my 30 years, what I've seen is that automotive retail is a pendulum that swings back and forth between sales and service. And clearly the pendulum is swinging back towards service. Dealers are going to lean more on service to bridge that profit gap. To keep the variable side of the house in good order. And that seems to really be what's happening. All the data points that way.
Mm-hmm. Do you think that's still the case where you're seeing dealerships kind of swing back and forth with focus, or are we simply in an environment where you have no choice but to, excel in every single department? I remember I asked Brian Benstock on the podcast. I said, Brian, I said, are you a new car dealer that happens to sell used cars, or are you a used car dealer that happens to sell new cars? And he was like, he looked at me like I fell off the sky. He's like, what do you mean? Like, he's like, we do it all. New, use, service. In today's market, you can't, you have to you have to have focus on every single thing, every single time, all the time. So what's your take on that?
Yeah. So, I mean, the starting point for me is that dealers are survivors. Dealers are scrappy. They're resilient, highly adaptive, right? And so dealers are great at optimizing their operations to whatever the circumstances are. But market conditions are kind of outside of dealers' control to some degree. So when I say we're a pendulum that swings back and forth, when we were making money hand over fist on vehicle sales, that's where the focus was, right? Let's optimize that. Now that market conditions are swinging back toward margin compression on the sales side, you gotta focus more. I mean, of course, you're going to focus on all aspects of your operation, but your focus is going to drift a little bit more towards service because that's where you have some more control on the top and bottom line. So I think that really that's to me that's how I'm not trying to be binary. It's either sales or service, but I think the focus shifts a little bit more back and forth.
Okay, so now let's take that a step further, right? If I was just your friend and you were advising me on my dealership, and I said, okay, talk to me about, so with new car sales margins compressing and there being a bigger shift into fixed ops, service being the leader there, right? How are dealerships like surviving? What are they focused on in order to, expand those margins, grow sales? Like, just kind of take us like step by step.
Sure. Well, I think generally speaking, if you're going to improve margins, we all have talked about artificial intelligence, AI, quite a bit. And that is an interesting area, but there's a term that's emerging that's called smart sourcing. Think intelligent outsourcing. That's an emerging concept where you can take advanced artificial intelligence technology and combine that with highly skilled agents, people who understand processing and compliance for automotive. And that is a way to leverage technology as an extension of the dealership that really can improve the top and bottom line. One trite example of that is, 25 years ago, everybody spent a fair amount of time processing payroll, right? Well, now nobody does payroll. It's all outsourced, and for the better. My company, WarrCloud, does warranty claims processing. We are a smart sourcing company, right? You outsource your warranty claims processing to our technology and our agents, and it really sharpens margins, but also can increase the top line. Just as an example. So I think that smart sourcing, particularly in the back office, are areas where dealers can make their operations more efficient, which always improves the bottom line.
Can you compare that to the status quo? I think for someone that doesn't understand this process, what I'm fascinated by is I love like opportunity arbitrage, right? Like where in business, where in a dealership specifically in this context, is there just opportunities? And then I like to think about it from like the practical sense, right? I've been a dealer for a long time, and so just knowing where things suck or like just bother me. And then I also like to think about it from the I call it the MBA sense. I'm not an MBA, but I mean in this of like the academic sense, which is like where is there a bad customer experience and a high margin and opportunity to bring a solution to the market to solve someone's problems. So from your perspective, right? Where in the back office, like tell us a little bit about how what you're doing today compares to how most dealers presently do it or have done it. And like, what is that efficiency that you're bringing to the dealership?
Sure. Well, in the specific of warranty claims processing, the typical dealer has one or more warranty clerks. The average expense there is about $70,000. And it's a human being who is processing claims the same way, literally, that it's been done for 80 years. You take this information, you look up codes, you write things down, you do data entry, and it is just a highly inefficient process. What we do is, by smart sourcing, you turn that process over to a company like WarrCloud, who goes in, extracts the data from the DMS, the core of the system, checks and improves the claim where something is wrong. It corrects it where something is missing. It adds it, and then it uploads it to the manufacturer site. And the dealership doesn't have to do anything other than supply, receipts for things like if you had a rental car receipt or a battery test slip. And what the net result of that is, because the machines know that every payment that the dealership qualifies for, you can increase your revenue by up to 12%. That works out to be about 142 grand a year. You can reduce the cost of processing by over 50%, and you can get the claims processed within 24 hours, which improves cash flow. So, check in terms of that's a great way to use smart sourcing and as extension of what's happening at the dealership. Some other examples of AI, I think, delivering a better customer experience and improving operations. You don't need to go any further than the phone. Traditionally, dealerships have not done a very good job of managing, inbound phone calls, but you can put AI in place that handles not just inbound phone calls, but inquiries through the web, text messages. We've all seen these things if you go to the website. And the AI now is smart enough to where the first couple of level answers, the consumer thinks they're chatting with a human being. Vastly improves the customer experience and reduces the manpower necessary. So yet another example of technology, smart sourcing, stepping in and delivering a better customer experience and reducing the expense for the dealer.
This episode is brought to you by Icon Technologies. Icon Technologies was founded by dealers for dealers to solve the daily challenges your dealership faces. Their no-cost lot management platform with Find the Car, Find the Keys technology makes finding inventory easy, while their dealer-branded Connect app drives customer loyalty and revenue. At Icon, they're more than a tech provider, they're your partner. Schedule a demo today by clicking the link in the show notes below and see how Icon Technologies can help drive your dealership success. All right, so now putting my investor hat on. Warranty work is growing in our industry. Recalls are growing. That's separate, but also just overall warranty work. And so I'm curious to know, what do you think is driving this trend? Like, why is this happening? Obviously, I said putting my investor hat on because this should be a positive and a benefit to your company, right? It's a tailwind. More warranty work to be done, the more value you can bring to the industry, right? Win-win. But and obviously better for the dealer in the sense that, right, they can do more work that is guaranteed payment from the manufacturer. But what's driving this trend?
Well, before I tell you what's driving the trend, let's define the trend, okay? So last year, and these figures are from NADA, warranty work increased about 7.6% year over year, whereas customer pay increased about 4.4%. And if you look at the trend line in terms of customer pay growth, it has been decelerating for a number of years. So that's 73% higher growth rate for warranty than for customer pay. So I think that there's a whole bunch of things driving that, you'll see, but I think there's two primary things. One, the obvious one, we're selling a lot more new vehicles than we were, and we're going to continue incrementally to sell more. I think the trend will be higher in the next couple of years, which means more warranty covered vehicles on the road. So, that's an easy one. The less obvious one is that according to JD Power, they've got a division called We Predict. They track the warranty costs for vehicles. Electric vehicles warranty costs run about 300% higher than an internal combustion engine. Yeah, that's the one that nobody saw coming. And what that means is that as the new vehicle sale mix percentage increases of EVs, that's going to drive that up even higher. I don't think anybody knows how many EVs we're going to sell in the coming years, but I think we'd all agree it's going to be more. So those two things combined are driving up warranty revenue for the dealers, which is a good guy.
Hmm. Okay. I didn't know that. So you're saying that, well, first of all, I want to go back to first point you made, right? You said that we're selling more vehicles. And I'm assuming in the context here, you're saying in relation to 2020 or 2021.
Well, year over year as well. I still think that the prediction for 2024 new vehicle sales comes in higher than 23, which was higher than 22, and so forth and so on. Yeah.
Correct, on an annual basis. Yes. So at least the September numbers I was referring to were September. But yes, you're correct. On an aggregate basis, we're going to be about 1.5 million off historical trends by the end of the year, or so. That's the prediction. Secondly, EV warranties or warranty sales are typically 300% higher. So let's take that one step deeper. Like, what's driving that? Who are the biggest beneficiaries of that? Can you give us some more details there?
Yeah, people have tend to look at how EVs are going to impact service work, sort of in a broad brush way, and everybody says, "Well, EVs have 50% fewer moving parts. That means service work is going to go down." But if you look a little closer, you got to differentiate warranty and customer pay. Where EVs really impact service work is in customer pay because there's very little maintenance to do. But warranty work being significantly higher, there's an offset there. So the dealer loses on the customer pay side, but they pick up on the warranty side. What's driving that? Clearly, it's sort of two aspects. One, there's just a lot more technology in an EV because we're not only are they electric, but we are sort of marching down this path toward autonomy. So there's a lot more onboard computing, a lot more sensors, and those things are new and they're expensive, much more expensive than analog components. So that's really what's driving that higher warranty cost.
Mm-hmm. And what about beneficiaries? Any brands that you're noticing on your end from your data that are just, killing it when it comes to the warranty, extremely profitable more than others?
It's situational. What happens is that if you look at warranty is driven fundamentally by safety recalls. So when a brand has a safety recall, that brand sees a spike in warranty work. Typically, I mean that's not 100%, but generally speaking, so it moves. Recently Ford had a significant recall, and that's driving a spike in warranty work. But as you go back, no brand is immune from that, unfortunately, or fortunately, depending on your perspective.
Okay, so I see the arbitrage here, right? If I'm a Stellantis dealer, if I'm a Ford dealer, and and I have the technician capacity, I mean, this is like, pretty much picking money from the trees. I mean, there's just opportunities there. Again, I'm exaggerating, but it's clear that, they're the most recalled vehicles over the past year. So that's where, I mean, and not that there isn't opportunity elsewhere, but that's obviously a big opportunity. Work, good for consumers, good for dealers, everyone wins.
Exactly.
Different type of question. You mentioned autonomy. Do you think that we're moving into a world, or have potential to move into a world where, the entry level vehicle disappears? Do you think that's like a realistic type of thing?
Well, I mean, when is the entry point? Is the fundamental question. If you go back 5 years, by this year, we were all going to be riding around in pods reading newspapers, right? And last time I checked, that hasn't exactly happened. I think that we get there, but I think we're a ways away. I think it was the founder of Google who said, forgive me if I got the attribution wrong, that we tend to overestimate what will happen in a year and underestimate what's going to happen in 10 years. So I think by the early 2030s, we'll be squarely in probably level 4 autonomy, and moving ahead. I don't think we come off the EV or the autonomy path. The economics are too compelling around that, but I think it's going to take a little longer than maybe some people think.
I also like to quote. There was a CNBC appearance with a former Uber executive, and he had some of the most sober take on this topic. This was like 5-6 years ago, but he said, look, like, they asked him about autonomy. Is it a threat? And he said, it is in 15 years. Like, we are just completely, like you said, we're overestimating how quickly these things happen. It's clear that the technology is somewhat there. And I say somewhat because, it's imperfect in certain places, but there's some pretty good technology. But it's hard to envision a world, go out a decade into the future, 2 decades even. It's hard to envision a world where that entry level vehicle, I mean, it's already sort of disappeared, right? I think I tweeted like a couple months back that there's maybe like 9 models that are transacting under $25,000, and none available at their entry level price of like under $20,000, right? So that we've essentially eliminated that vehicle anyway on the new side, which sort of just leaves you with the used side. If you're looking for something like that.
Yeah. On the other hand, markets aren't perfect and they tend to overcorrect. If there's a significant opportunity there, then I think you'll see a correction back in that direction because, it's opportunity. You've got a better crystal ball than me though. And look, I came up in the age of where, you couldn't wait to get your driver's license and it was a type of freedom. And I still love driving in cars, so there's part of me that wants to cling to that, I think.
I hear you. So tell me more about, I want to go back to, you mentioned recall work drives the most warranty claims at dealerships, would make sense. That's, these things come up, whereas a normal warranty job may come up if you just, a part malfunctions. What are you seeing? How are dealers generating recall work? I mean, what are you seeing as like best practices?
Yeah, it is I think it's a significant opportunity that dealers need to pay more attention to. So the best practice is to get a company, and there are many companies out there who do this, who manage recalls on behalf of the dealer. And what you want to do is you want to find a company who has the capability to identify an open recall and action that. In other words, reach out to the customer and offer them the ability to schedule a service appointment, whether it be in dealership or mobile service. And you want to be looking in 3 areas because there's 3 areas of opportunity. You want to be looking in your PMA, your primary market area, but you also want to be looking in your service lane and see if any of those vehicles have open recalls. And you want to be checking your own vehicle inventory to make sure that. So if you're covering those 3 areas, and you're offering, making sure you offer the ability to action, then you are getting as much recall work in as you can. And I think recall work is very important to the dealer for a whole bunch of reasons. One, it doesn't cost the consumer anything. So they're coming in for a free service, which, since they're already there and they're not spending any money, creates an upsell opportunity. And if that customer hasn't visited you in a while or ever, you've got a great opportunity to either reclaim a lost customer or get a new customer. So I think recalls are huge opportunity for the service department.
We just had Ryan Maher on the pod actually the other day.
Busy
and
car.
This was, everything. Busy car. They also just raised money. So this was actually what we discussed, just how, it's transforming the industry. So it seems like it's something that the two of you is obviously mutually beneficial.
Oh, I know Ryan. He and I are both in St. Louis. He's a great guy.
This episode is brought to you by my very own car dealership guy industry job board. CDG Jobs is revolutionizing how talent connects with top automotive companies. Here's a shocker. We're not using any fancy technology or AI. We literally built a simple HTML job board. That's it. But it works really, really well. And the best part, it's completely free for CDG listeners to post and fill positions at their firms. So I'm sure you're wondering, what sets us apart? Well, when companies hire through CDG Jobs, they're choosing from a pool of the most informed candidates in the industry. Don't wait. Whether you're hiring or seeking a new opportunity, visit cdgjobs.com today or click the link in the show notes below. That's cdgjobs.com. I want to touch back again on smart sourcing, which to me, I perceive that as AI tech behind the scenes taking over manual processes within businesses, in our case, dealerships, right? We're seeing this everywhere in every industry, right? If I'm not mistaken, this is one of the biggest applications today for AI, right? I just listen. I listen to lots of podcasts, read, lots of newsletters and whatnot. And the simple, form of taking a manual process and having a, external company infuse AI technology, automate it, is again one of the most practical and value add ways where tech companies are coming in and making traditional companies much more efficient. My question to you is, where else do you see opportunities for this type of smart sourcing within the dealership back office? Is there anything that for you as a practitioner that's really close to the pulse here that you're seeing is like, hey, this is next, or this is another area where we should expect the dealership business to experience some, disruption or significant improvement over the next couple of years? Anything like that?
Yeah, I think that we're just catching the wave of AI. I don't think there's an area of the dealership that will be untouched by it. I mean, as I mentioned, we're already managing calls, web inquiries, online chat with AI. Obviously, we're doing warranty claims processing automation with it. There are companies out there right now that are doing multi-point inspections using AI. Inventory management, and the list goes on. But it is going to get much more sophisticated as we go forward. One of the things I recommend to dealers is that they, take 15 minutes to better understand the components of AI, because we say AI like it's this catch-all technology, but it's really not. AI is sort of the overarching category, but you have machine learning, you have natural language processing, you have generative AI. All of these things have different applications for the dealership. They do different things, and you really got to understand them to understand what's applicable for you. But one of the significant areas, even though this technically isn't AI, is coupling AI to what's called RPA, robotic process automation. That is technology that essentially does intelligent data input. It mimics a human being inputting data into a system. When you couple that capability to the decision making of AI, that is a very powerful combination that I think will transform in many degrees particularly the back office. Warranty claims processing, titling, regular updating of financials and accounting. I think all of that will be driven by AI and RPA as we go forward.
I want to transition now to your company a little bit for any entrepreneurs, investors, or just dealers, or anyone that's curious on the pod. I always love to know what's happening internally at the companies of people I speak with. First of all, tell us a little bit about the capital raise, right? Why raise more capital? What was that like? Give us the inside scoop.
Well, thank you. Yeah. So why raise more capital? The company, as I mentioned, we automate warranty claims processing on behalf of dealers. And the company's been growing like crazy. It's really starting to feel like one of those right idea at the right time kind of things. And to continue fueling increasing growth, you need capital. So, the board said, let's go out and raise some more. And as you probably know, it is a tricky time in the investor community to raise money. But we were fortunate enough to have a tremendous up round and raised $20 million led by a new investor, Santana Growth Partners, with two of our existing investors, Argentum and Automotive Ventures, coming in alongside.
Amazing. And of course, I know Automotive Ventures, Steve Greenfield. I don't know the other two firms, but I'm sure they're great. Okay, so what's your plan, right? Like, what's the product roadmap look like here? What's next?
Yeah. Well, the use of proceeds. Number one, we're going to drive more artificial intelligence, machine learning, if you will. If you look at our claims automation today, for certain brands, we automate up to 60% of the claims, meaning the claim comes in, a human being never touches it, and it gets uploaded to the factory. What I want to see is the artificial intelligence being good enough that 80% of any brand's claims are automated. So that's number one investment. Number two, we are just growing like crazy, and I want to build out our operational capabilities so that we can install a dealer within a couple of weeks of them signing with us. And then the last thing comes back to customer care. We have found that having a customer success department doing what we call QBRs, quarterly business reviews for our customer, really just, lavishing great customer care on the dealers, it reaps tremendous dividends. So we're going to invest in growing that part of the company as well. And those are kind of the three big buckets.
Mm-hmm. Jake from Raceway texts me all the time about your progress. So he definitely keeps me in the loop. He's your biggest evangelist.
Oh,
I know he's an investor as well, but
Jake is
yeah.
great, and I'm glad to hear that. I mean, he gives us as much as we get from him because he's a great operator and he's always got great advice. I get texts from him. Have you tried this? Have you thought of that? So yeah, it's a great relationship.
Yeah, he's excited about it. You know what I loved on your website, by the way? I love where you wrote WarrCloud by the numbers, and you wrote 28-second process warranty claims. My brain is fried from all the social media stuff. Like I'm already, I think like a social media machine. I walk in like the street, I look at the sky. It's bad, but I digress. When it comes to you, I saw that 28 seconds process warranty claims. My brain was like, how 28 seconds is transforming the like how 28 seconds is transforming the dealership service center or like something like that. That's like, wait, what? Counterintuitive, but that's where my brain went to from like a marketing hook for what you're doing, because it's true. It's like you've created a great solution. It's done in 28 seconds. It's transforming the back office of, a dealership, and it's you're doing great work.
Well, thank you.
That was just
here's a
free nugget.
Here's a great comparison for that. So we did market research where essentially we went out and we asked dealers and service leaders a whole bunch of questions about warranty at the beginning of the year. Do you know what they told us? This isn't me. This is what dealers told us. The average time across all warranty claims, all brands, the average time to process a claim, 22 minutes. So 22 minutes versus 28 seconds.
So you're doing pretty well.
We're doing okay.
Well, let's get it down to 5.
Yeah. You sound like me now. You sound like me and my.
I know. We got to do better. Yeah. Right. Got to keep pushing. And of course, if anyone, for those that want to learn more, we'll put the WarrCloud link in the show notes below. So you can learn more about what Jim's working on. WarrCloud link will be below. Jim, always fun chatting. We'll have to bring you on again. Thanks for coming on.
Oh, I love coming on. It's great seeing you and your team. Thank you.
All right. Hope you enjoyed that episode. Please give the podcast a rating, consider subscribing to the show, and check the show notes for links to what we talked about. Thanks for tuning in. I'll see you guys next time.